For many individuals, the idea of easily obtaining an unsecured credit card remains a distant dream. This is especially true for those who carry the burden of a poor credit history. The financial landscape can feel incredibly challenging when your past financial decisions limit your present opportunities. While some consumers effortlessly enjoy the convenience and generous limits of credit cards, others face constant hurdles. They might see friends or family members making purchases with ease, while their own applications are rejected. This disparity highlights a fundamental challenge in personal finance. Unsecured credit cards are inherently riskier for lenders. Unlike secured cards, there is no collateral backing the credit extended. This means the lender relies solely on the borrower's promise to repay, making creditworthiness a critical factor in their decision-making process. Consequently, individuals with bad credit frequently encounter rejection when applying for these types of cards. It can be a frustrating and disheartening experience, leaving many wondering how they can ever access the financial tools they need. Understanding why this happens is the first step toward finding solutions. To truly navigate the financial landscape, it is essential to understand the perspective of lenders. They view your credit score as a crucial snapshot of your financial responsibility and reliability. This 3-digit number summarizes your past borrowing and repayment behavior. A low credit score signals a history of negative financial behavior. It tells lenders that there have been instances where financial obligations were not met as expected. This raises a red flag regarding your ability to manage new debt responsibly. Several indicators contribute to a low credit score. One of the most significant is a history of missed payments. Late or missed payments on loans, credit cards, or even utility bills can severely impact your credit standing. Another key factor is high credit utilization. This refers to using a large portion of your available credit. Maxing out credit cards or consistently carrying high balances suggests a reliance on credit and can indicate financial strain. Other negative marks on a credit report also play a role. These can include bankruptcies, foreclosures, or accounts sent to collections. Each of these events signals a higher risk to potential lenders. Given these indicators, lenders naturally hesitate to extend credit to high-risk individuals. Their primary goal is to lend money that will be repaid, and a low credit score suggests a higher probability of default. They are in the business of managing risk, not taking unnecessary chances. The fear of potential default is a significant concern for any lender. Default occurs when a borrower fails to repay their debt as agreed. This results in financial losses for the lender, which they aim to avoid at all costs. Therefore, when you apply for an unsecured credit card with bad credit, lenders see a higher likelihood of not being repaid. This is why they are reluctant to approve applications from individuals with a history of financial instability. Their caution is a direct reflection of the risk involved. While obtaining a traditional unsecured credit card with bad credit is challenging, it is not an insurmountable barrier to building a healthier financial future. There are specific options designed to help individuals in this situation. Understanding these alternatives is crucial for making informed decisions. The most common and often recommended path for individuals with bad credit is a secured credit card. These cards are specifically designed to help consumers rebuild their credit history. They offer a practical way to demonstrate responsible financial behavior. A secured credit card requires a security deposit. This deposit is typically held by the issuer in a separate account and acts as collateral for your credit line. It provides a safety net for the lender, significantly reducing their risk. The deposit amount usually equals your credit limit. For example, if you deposit $300, your credit limit will be $300. This direct correlation makes the card accessible while still providing a functional credit line. This deposit acts as collateral for the lender. In essence, it guarantees that the lender will not lose money if you fail to make your payments. This is the fundamental difference that makes secured cards more accessible. The deposit mitigates the lender's risk significantly. Because their potential losses are covered, they are much more willing to approve applications from individuals with lower credit scores. It's a win-win situation for both parties. If a default occurs, the lender can use your deposit to cover the outstanding balance. This mechanism protects the lender from financial loss and is why secured cards are a safer bet for them. It ensures they can recover their funds. Ultimately, secured credit cards serve as an excellent stepping stone to rebuilding credit. By using them responsibly, making on-time payments, and keeping balances low, you can demonstrate creditworthiness over time. This positive behavior is then reported to credit bureaus, improving your score. While less common, there are some unsecured credit cards specifically designed for individuals with bad credit. These cards exist, but they come with certain trade-offs that are important to understand. They are not as widely available as secured options. These cards often come with higher interest rates. Because the lender is taking on more risk without a security deposit, they compensate by charging more for the money borrowed. This means carrying a balance can become very expensive. They also frequently include annual fees. These fees are charged simply for having the card, regardless of how much you use it. It's another way lenders offset the increased risk associated with these accounts. Furthermore, these cards typically feature lower credit limits. You might only be approved for a few $100s, which can be restrictive. This lower limit helps the lender manage their exposure to potential losses. In essence, with these cards, the lender takes on greater risk. They are extending credit without collateral to individuals who have a history of financial difficulty. This is why the terms are often less favorable for the consumer. While they offer a path to unsecured credit, it is crucial to weigh the costs and benefits carefully. For many, a secured card remains the more financially prudent choice for credit building due to its lower overall cost and clearer path to improvement. Obtaining an unsecured credit card with bad credit is indeed challenging, but it is certainly not impossible. It requires a strategic approach and a commitment to improving your financial habits. This journey is about demonstrating consistent responsibility. The first step involves understanding the challenges involved. Acknowledging why lenders are hesitant is crucial for developing an effective plan. This self-awareness helps you address the root causes of your credit issues. Next, it necessitates exploring all available options. This includes not only secured cards but also other credit building tools like credit builder loans or becoming an authorized user on someone else's account. Diversifying your approach can accelerate progress. Crucially, you must demonstrate responsible financial behavior consistently. This is the cornerstone of credit rebuilding. Lenders want to see a pattern of reliability, not just isolated good actions. One of the most important responsible financial behaviors is paying all your bills on time, every time. This includes credit card payments, loan installments, utility bills, and even rent if it's reported to credit bureaus. Payment history is the most significant factor in your credit score. Another key behavior is maintaining a low credit utilization rate. Aim to use no more than 30% of your available credit on any card. Lower utilization indicates that you are not overly reliant on credit and can manage your debt effectively. It is also vital to avoid taking on more debt than you can comfortably manage. Overextending yourself can quickly lead to missed payments and further damage your credit. Living within your means and prioritizing paying off debt. Consistent practice of these habits will improve your credit score over time. Credit building is a gradual process, and positive actions accumulate to create a stronger financial profile. Patience and persistence are essential. As your credit score improves, you will gradually qualify for more favorable credit card options. This includes unsecured cards with lower interest rates, no annual fees, and higher credit limits. Your hard work will eventually pay off. Remember, rebuilding credit is a marathon, not a sprint. There are no quick fixes or shortcuts to a strong credit score. It requires sustained effort and discipline over months or even years. Ultimately, success relies on patience, discipline, and smart financial choices. By committing to these principles, you can transform your financial standing and unlock a world of better credit opportunities. Your financial future is within your control.